The GDXJ is up 10 times as much as the S&P 500 this year. 10 times as much. I haven't just been shorting the stock market, and that's not how I've expressed my bearishness. I've expressed my bearishness by buying gold stocks. That's how I've been bearish, by being bullish on gold stocks, and the trade is working out. The GDX, that is up 19.33% over the last 10 years, is cheap. So even though gold stocks have doubled this year, if you buy them now, you're getting them cheap. They're still cheap relative to where they are going to go. So don't get into the, oh, I can't buy them now. It's too late because they've doubled. Yeah, they'll double again and double again and double again.
In today's news recap, silver price holds $42 as Fed rate cut and charts signal breakout. Silver rose on Monday to $42.27 as traders positioned for the U.S. Federal Reserve's policy meeting. Like gold, silver is benefiting from expectations of a quarter-point rate cut despite a stronger dollar that briefly capped the move. The U.S. dollar index edged 0.1% higher, making dollar-denominated metals less attractive to foreign buyers. Market sentiment is split between short-term profit-taking and optimism that looser monetary policy will support safe haven demand. Despite inflation data last week coming in above forecasts, analysts don't think it will derail the Fed's dovish stance. That's keeping silver in the spotlight, especially as industrial demand remains strong. Silver is respecting an uptrend channel with higher lows. It's trading above both the 50-period moving average at $41.21 and the 200-period moving average at $38.10. The strength of the trend is evident. Key levels to watch: resistance at $42.45. Breakout could target $42.85 and $43.25. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, hype the video, and check goldsilverstacks.com to get the Stacker's Handbook, the ultimate guide to trade the gold-silver ratio and stack efficiently without relying on market commentators. Link in the pinned comment. Let's get back into the episode.
It's going to be very frustrating for the Trump administration and for the Fed. Now, some of you may say, well, gold is rallying. Silver hit a new 14-year high today. Finally, gold didn't. I mean, gold has been a little subdued the last couple of days. It's trading around 3,635. Oh, by the way, just this week, gold finally hit an inflation-adjusted all-time high. Now, not real inflation, but whatever the CPI adjustment is. We finally took out the $825 high from 1980. But this is not the end of something. This is the beginning of something. We are just getting started here in gold and silver. But gold and silver are also rising into this rate cut. And you may say, well, Peter, if you think that it's going to be a buy the rumor, sell the fact for bonds, why wouldn't the same hold true for gold and silver? Maybe gold and silver will sell off on the rate cut. Possible. It's possible. But I don't think it's that probable, because even though gold and silver have rallied, I don't think they've rallied nearly as much as they should. But also, there's a big difference between the gold trade and the bond trade. Rate cuts are bearish for bonds. Rate cuts are inflationary. It means the Fed is turning its back on 5% inflation. That's probably going to become 6 or 7, and is instead choosing to die on the hill of employment and fight that battle. To hell with inflation. So once the Fed does that, that's a big signal to get rid of your bonds, right? Because the biggest destroyer of the value of bonds is inflation. And of course, rate cuts mean a weaker dollar. So why should foreigners want to buy our bonds if we're going to repay them with dollars that are worth less in their own currency than the dollars they loaned us, especially when we're reducing the rate of interest that we're paying them? So these rate cuts are bearish for bonds. So even though bonds have rallied on anticipation of the cuts, the event they anticipated is actually bad for bonds. So they shouldn't be rallying. So that's another reason why they should sell off and why they probably will sell off. On the other side, rate cuts alongside of rising inflation are the most bullish thing you could have for gold. So gold should be rising in anticipation of these cuts, and it should keep rising following the cuts. Because as people want to get out of their dollars and get out of their treasuries and mortgage-backed securities and whatever else has got a dollar coupon and a dollar principal payment attached to it, what are they going to buy? Well, if you're a central bank, there's really only one choice, and that's gold. So the central banks are going to be loading up on gold as they're unloading on U.S. dollars and treasury debt. So gold and silver should keep rising, even if there's a slight buy the rumor, sell the fact move on a rate cut. But again, I wouldn't even wait for that. Don't even try to be tricky. As I've been saying, you got to buy gold and silver. You don't wait, you just buy it. If you don't have it, you need it. And if you have some, chances are you need more, right? So you got to go to Schiff Gold. I mean, I like a broken record. And again, people can say, well, Peter, don't you make money when we buy some gold and silver? Yeah, I make a little money. I got plenty of money. The reason I want people to go to buy Schiff Gold is because they need to own it. I mean, I've been telling people you got to own gold for 25 years. Look where it is. It started. It was under $300 an ounce when I started. Look where it is, right? There's a reason that I want my followers to own gold and silver. That's why I set up Schiff Gold. I set it up because I was telling people to go buy gold and silver, and then they would go buy it and get ripped off. So the reason I'm telling people to buy their gold and silver from me, it's not just because I make a little money, but because I know you won't get ripped off. And you don't get ripped off because I do make a little money. I don't make much, but I make it up on volume, but I don't make it on each individual transaction. But I want my followers to own gold and silver because I don't want them to go broke, right? I want the people that listen to me to have money. Right? One day we're going to need that money to help out the people who don't listen to me, which, unfortunately they far outnumber me. But also look at gold stocks, right? I've been talking about these stocks now. I've been pounding the table on these stocks. So the GDX, right, which is the index of the biggest gold stocks, is now up 103% on the year. And the year ain't over. 103%. This is September. We haven't even hit the fourth quarter yet, which I think will be the strongest quarter of the entire year. And we haven't even gotten to it yet. We're up 103%. Now the GDXJ, which has some smaller mining companies, not the really tiny ones like some of the ones that we got at my gold fund. But now these ones are moving. So now the GDXJ is outperforming the GDX. It's up 111% on the year. 111%. Now, compare that to the S&P, up 12.25%.
In today's precious metals news recap, silver steals spotlight, charging toward 50 while gold pauses. Precious metals remain firmly bid, but leadership has shifted. Gold's rally stalled just ahead of a key Fibonacci projection, while silver broke out to a new 14-year high. Both metals remain supported by a mix of geopolitical risk, policy divergences, and strategic investor demand for hard assets. Silver's case is probably more compelling. The market faces a prolonged supply deficit and tightening physical availability, giving its rally deeper structural foundations. This dynamic, coupled with strong investor interest, has pushed prices higher and opened room for further gains on both near-term and medium-term horizons. Near-term, silver will remain bullish above former resistance at 39.49, now turned support. Next target is 61.8% projection of 28.28 to 39.49 from 36.93 at 43.85. Decisive break there could prompt upside acceleration to 100% projection at 48.14. Now smash the subscribe button and turn on notifications notifications so you do not miss out our daily recaps. And go to goldsilverstacks.com to get the Numismatics Handbook, the perfect guide for stackers who want to get active trading gold and silver coins instead of selling their gold and silver bullions for fiat. Enjoy the episode.
That's nothing. The GDXJ is up 10 times as much as the S&P 500 this year. 10 times as much. Do you think they talk about that on CNBC? No, they don't. They don't talk about that at all on CNBC. Now, the 12% return on the S&P, that's about the same as on my foreign bond fund. So my clients this year just buying short-term foreign bonds are making as much money as people taking a risk and buying the S&P 500. Now, if you look at my dividend payer strategy, my foreign dividend payers, conservative dividend paying stocks, it's up better than 43% on the year. 43, close to 4 times the return on the S&P 500. Now, this is the first time in many, many years that fund has beaten the S&P. But I think it's the beginning of a long trend. But what's really significant about the gold stocks, I did the math. Over the past 10 years, the S&P has returned average annual compounded gain of 14.91%. Now, that's a great return over 10 years, 14.91%. It's much more than the historic average. But that's a big return. Compare that to the GDX, which is up compounded over 10 years, 19.33%. So about 25% greater return compounded over 10 years in gold stocks. So during those 10 years, a lot of people are making fun of me. Peter's this perma-bear. He's telling people not to buy the U.S. stock market. That's correct. I told people not to buy the U.S. stock market. I told them to buy gold stocks instead of the U.S. stock market, and now they're better off, at least if they started 10 years ago. Now, they're also better off if they started 3 years ago. There are a lot of time frames where they're better off. In fact, if they started 3 years ago, they're way better off, even more so than if they started 10 years ago. Now, of course, the problem is some people didn't have the patience to wait it out, right? There were people who bought gold stocks on my recommendation 10 years ago who sold them last year. That was terrible. They threw away a winning hand. I mean, I tried my best to prevent it. Whenever one of the guys from Europe Pacific Asset Management or told me, hey, this guy is selling, I called him up personally to try to talk him out of it. And, the reason everybody gave me, look, I'm waiting so long, and now Trump is president, he's going to do all this. I'm tired of holding these gold stocks, I had record withdrawals from the Europe Pacific Gold Fund, EPGIX, in the fourth quarter of last year. And then in the first quarter of this year, people sold the fund. And they didn't just sell my fund. People were calling up the brokers that I work with and selling their individual gold stocks at the end of last year. Stocks that have doubled, some have tripled since people sold them against our recommendations. Yeah, we made a little commission when they sold, but we told them not to sell. I told people not to sell. But here's the bigger deal. The stock market is up 14.91% compounded for 10 years. It's expensive. The U.S. stock market, by any way you want to measure it, is overpriced. Now, that doesn't mean it can't get more overpriced. In fact, if they create enough inflation, everything's going to go up in price, including stocks. That's why I'm not short. Other people say, Peter's this perma-bear, but I'm not short the market. None of my clients are short the stock market, right? So I haven't just been shorting the stock market, and that's not how I've expressed my bearishness. I've expressed my bearishness by buying gold stocks. That's how I've been bearish, by being bullish on gold stocks, and the trade is working out. But the point I'm just about to make is that while the S&P is up 14.91%, it's expensive. The GDX, that is up 19.33% over the last 10 years, is cheap. So even though gold stocks have doubled this year, if you buy them now, you're getting them cheap. Now, are they as cheap as they were? Obviously not. But they're still cheap in the scheme of things. They're still cheap relative to where they are going to go. So don't get into the, oh, I can't buy them now. It's too late because they've doubled. Yeah, they'll double again and double again and double again.
What do you think of his take? Do you agree with him? Is a big rally coming for gold and silver before a big top forms, or will gold and silver outperform all expectations? Let us know your honest opinion in the comment section down below. Smash the hype button if you enjoy our recaps, and check this video right here because you'll love it. I'll see you on the other side.